Good evening and welcome to another episode of the weekly market wrap. Of course, today the title for this presentation will be Trump 2.0, his first 30 days of his second term. And of course, today is February the 23rd, and it's an important day because Trump has basically just passed his 30 days in his second term. And it's also a very special day because 3 years ago, on February 22nd, the war in Ukraine between Russia and Ukraine actually started. And right now, 3 years after the war, there has been a process that seems to suggest that the US may want to end the war in direct negotiation with Russia. So we will have to see what happens after the two presidents are able to meet personally, and there are rumors that they may do so in 2 weeks' time. And of course, tomorrow, on February 24th, NATO members, including UK, Poland, Germany, France, and Sweden, are meeting in Paris to try to thresh out a way forward now without the US as the main force behind the war in Ukraine. So we will have to see what happens. And also, of course, today, February 23rd, we have the Germany election. The result should be out in about maybe 5 hours time, and we should be able to know who will be leading Germany forward. And rumors is suggesting that the right wing will be leading this Germany forward. And what happened in Germany will have a massive ripple impact on the rest of Europe and the world. Okay, and let's see what happens in this election. But be prepared for tomorrow when the market opens. At least in the currency market, we should get some kind of reaction. Okay, hopefully the sell-off late on Friday on Wall Street do not spill over into Asia, but we will have to also watch the result of Germany's election. If it's going to be an ultra right wing that actually will be in parliament, will be in power, then of course it will actually exacerbate the sell-off that we saw last Friday. But anyway, today we have a lot on our plates and we shall continue with the presentation itself. Now, before I get to the content proper, I would like to remind you that this presentation is not an offer to buy or sell any securities, be it FX, CFD, or even crypto for that matter. And of course, the trading of any kind of margin financial products do carry risk. So do understand your own risk tolerance before you attempt to trade any kind of margin products. And I'll be sharing with you my views on the various market later on in the second segment of this presentation. And do be aware that those are my opinion. It has not, it is definitely not meant to be an investment advice. So for all of you out there, just be sure that you understand what you're taking on, and that the content of this presentation obviously has not been vetted by any regulatory body. Just be aware of this fact. Okay. Now, the first news that came out this past week on Monday was the GDP for Q4 for Japan. The number came in very, very strong. You can see the Q4 ended the year at 0.7%, which is very, very strong. In fact, it's matching the Q2 estimates for GDP in Japan. So we know that it appears that economic activity has picked up in Japan, and that is actually keeping the Nikkei buoyant. Okay, but again, Japan is just only one of the major G7 economies. The other one that is doing relatively well is, of course, the United States, but the rest of the G7 are not doing fantastically well. Okay, so we have to watch this entire space here, whereby the G7 may no longer be leading the global economy, and you can see that the shift has moved to the global south, led by BRICS. So again, we will need to watch this development very, very closely. But 0.7% is definitely a number to be chilled, because the market was only expecting a growth of about the same in Q3 at 0.3%. So 0.7 is all good. Now, the other thing that has also happened this past week has been in Australia. Australia finally joined the rest of the world in cutting interest rates. It has held interest rate for much longer than the other major economies, and I think the reason is very, very obvious because inflation in Australia is still raging away, and the central bank, which is the Reserve Bank of Australia, does not want to inflame inflation by cutting interest rate too early. But I think the economy is already wobbling, so they will have to uh, shift the focus towards economic growth rather than to fight against inflation. So this has resulted in the first cut in interest rates since interest rate stays at 4.35% for as long as you can remember. So currently it's at 4.1%, which is also within expectation. And we can see that the Aussie dollars did not come off as a result because this is very much anticipated. In fact, the Aussie dollars actually spiked higher until Friday when the dollar come back in slightly more buoyant condition whereby it causes the other major currencies to actually retreat from recent highs. Okay, but we know for a fact that Australia now have joined the rest of the major economies in cutting interest rates. Now, next, it will be the labor report from the UK. We can see the report suggests that it is not too bad. We can see claimant count actually picked higher. Okay, market was expecting 10,000 uh, 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 people asking for some kind of help in terms of trying to get through these difficult times whereby they couldn't find a job. So they only expected 10,000 applicants, but it came in at 22, which is more than double. And this is on top of the previous month, which is December, 700 people actually applied for unemployment benefits. So we can see there's a pickup in people needing help. But at the same time, when the employment change came in, it was actually very good because in December it was 35,000, and for January, which is last month, it's 107,000. So there has been a marked increase in people being employed. So this is actually going in contrast to what we are seeing in terms of claimant count change. But here we can see that more Greeks are being gainfully employed, but the number is still relatively weak because at a high itself in August last year, we can see the uh, employment change has actually picked up at 373,000 jobs. And where we are right now, 107 is still very far away, about 200,000 jobs less compared to August last year. Okay, but again, it is a good sign considering that it has managed to create a U-turn from the December number of 35,000 jobs only. Okay. Now, unemployment rate, you can see unemployment rate has actually stabilized at the current 4.4%. Market was expecting a slightly worse number at 4.5%, but 4.4 is good because at least it matches, it did not create new high as far as the unemployment rate is concerned. Last year, the highest was also 4.4%. In December last year, it was also 4.4%. So on that front, we have not seen a deterioration in the labor market now that the employment change has actually picked up quite significantly from 35,000 to 107,000 in January. So it's good news. Next, we have the CPI numbers from Canada. Of course, we have two sets of number. One is the Bank of Canada number, which is expecting no expectation, but it has actually gone from bad to worse. The headline numbers for year over year for January was expected to be not expected, was actually higher than in December, which was 1.8%. It came in at 2.1%, so it's significantly higher. And the consumer price index, this is the other set of CPI numbers year over year for January was also marginally higher, although not as bad as the figure from the Bank of Canada. It was at 1.9% relative to 1.8% in December. So again, we can see that inflation is still a problem in Canada. We can see that the numbers has been picking up since August of last year. From 1.5% currently sits at 2.1%, which is definitely not a welcome news. Okay, so that means it will be hampering the Bank of Canada's effort to cut rates further. So maybe what they'll do is that they will hold off further rate cuts, okay, and see what happens to the CPI numbers, okay. But that will be at the expense of the real economy, which I think the GDP number should show that there should be some kind of deterioration in their GDP numbers for Q4. Now, New Zealand, the Reserve Bank of New Zealand has been cutting rates. In fact, it is one of the very first major central banks to start cutting rates. And we can notice that the rate cuts started in August of last year. So this is definitely earlier than the Federal Reserve. So we can see from 5.5% currently it is at 3.75%. So we have come a long way, and this is definitely a reflection of the desire to actually stimulate the economy by getting cost of doing business lower. And we can see that the GDPs in New Zealand has been going from bad to worse. So technically, I think New Zealand is in a recession right now. There are reports that a lot of Kiwis are leaving New Zealand for greener pasture in Australia, and Australia itself is not doing that great by itself. So we can see that at least in the oceanic economy, represented by New Zealand and Australia, they are definitely struggling. And I think going forward, there will be even more headwinds. Okay, so just know that New Zealand has been leading the pack in cutting interest rate in a bid to revive their economy. Then we had the CPI numbers coming up from UK. We can see that the number has actually been not as bad. Okay, market did not have any expectation for the month-over-month number for January. In December was 0.3%. Now it came in at negative 0.1%. So that is a disinflation. And for the year-over-year number, we also see we see a bit of a contrast here. In December was 2.5%, and for the year-over-year number, it is actually much higher at 3% compared to 2.5% in December. Then we look at the core, which is taking out the food and energy component on the year-over-year number. We can see that it has also reflected badly from 3.2% in December to 3.7%, which is within expectation. So on the chart to the right, we can see that the CPI number year-over-year, which is the more important number, has been climbing. Okay, so you can see very much like what we saw in Canada. We can see that inflation is definitely re-accelerating. It was as low as 1.7% in September last year. Now it's at 3%. So it's almost double, okay, of what the number that we saw just 5 months ago. So this is definitely not a good reflection of the state of inflation currently in the United Kingdom. Okay, so but the year-over-year, the month-over-month number is definitely more sensitive. It has seen a disinflation, but the year-over-year continue to charge higher. Okay, so the core even is at the highest we have seen since May of last year. Okay, so again, overall inflation remains very sticky in the UK. Now, if you have any question, do remember to put them into the chat box so that I can address your concern as we go along. Now, of course, another week has passed and Trump has again touched on tariff. This time he's talking about imposing a 25% tariff on auto, chips, and pharmaceuticals. And that will kick in probably after April Fool's Day on April the 2nd. So this will have a much significant impact on the imposition of tariff from aluminum and steel, because uh, a lot of parts come in from either Mexico or from Canada itself. So I think the impact on the auto industry in the States will be a lot higher. Definitely consumers in the States will be subjected to higher prices, because a lot of components, especially from Canada, comes into US and then we send back to Canada for further further improvement before they send the final products back to the United States. So this will impact Canada more than Mexico. Okay, so I think going forward that will be an issue for Canada economy. Now Canada economy is already wobbling. So with this new tariff on aluminum, on steel, and auto parts, for example, that will be felt almost immediately once it kicked in and the first few days of April this year, which is like 2 months from now. Okay, so again, we will have to watch how this thing evolves. Maybe Trump is going to use this again as a leverage to get what he wants in terms of companies in Canada to actually reshore into the United States. So I think his game plan is to make it attractive for foreign companies to actually build up plants and do the manufacturing in America by imposing punitive and very expensive tariff. And I think that will be his game plan as far as his tariff is concerned. Okay, he believes that by imposing a wall of tariff on all imports, it will make it totally not cost effective for companies to continue to sell to United to the US from overseas. What he wants is that they want this company, foreign company, to actually set up manufacturing plants in America, thereby boosting the economy in the States. But whether he can get what he wants remains to be seen because there will be retaliation from Canada. Okay. Then the other major news that actually moved the market was the FOMC minutes, and in this particular minutes, which was for the last month FOMC meeting, in which the FOMC actually held interest rates unchanged, and the chair, Jeremy Powell, has actually hinted that they are not looking to make any changes to interest rates and basically stay pat and waiting for the data to catch up. Okay, the key question, the key highlight here is that there will be no change in interest rates, and this is definitely making Donald Trump very, very unhappy because he wants not only higher tariff, he also wants to bring down the value of the dollar, and in order to do that, he needs to lower interest rates. And of course, the lower interest rate is definitely going to be advantages in servicing the national debt. We will have to see whether he's going to be able to get what he wants. But I think based on the data, most analysts believe that the central banks, the Federal Reserve, will have no excuse to cut interest rates anytime soon. And that will mean there will be a confrontation between the administration as relative to the Federal Reserve. How the relationship will play out between Donald Trump and Jeremy Powell remains to be seen, but definitely it will not be a happy relationship going forward unless Trump gets what he wants. Okay. So the next figure that came out was on Thursday, and this was also one of the major news that came out. Australia employment change. We have seen that number also has been quite favorable on the month-over-month change. Employment change for the month of January actually picked up from expectation of 20,000 to 44,000, although it is still a touch lower than the December number of 56,300 jobs. Okay, but again, it was not as bad as the market has feared. Okay, and unemployment rate stays constant at about 4.1%, which is in line with market expectation, but it is a touch higher compared to December. So unemployment rate is again re-accelerating in Australia. Okay, so that is definitely not a good sign, suggesting that the economy is still very weak, whereby the number of jobs creation has not been very robust of late. So this is the unemployment rate tick higher in January, even though job creation handily outpaced forecast. Net employment rose to 44,300 in January when it was 60,000. Okay, so this is a reflection that the number of jobs being created has not been as robust. Unemployment rate is again inching higher. Next, we have China. This one has no surprise here. The People's Bank of China has left interest rate unchanged. I think the Chinese want to keep their powder dry so that they want to be able to respond to Donald Trump's expected increase in tariff. So there will be, I think the Chinese are getting ready to respond to further tariff imposition on China as far as their export to the United States is concerned. So again, this one comes as no surprise. 3.1% has been the current rate for the last 4 months. And again, like I said, this has not been surprising. Okay. UK retail sales has picked up, okay, but here again we will have to consider that maybe it's a bit of a front running because we saw the same thing in the States, whereby we can see that the month-over-month data for consumption has actually gone up ahead of the expectation of imposition of universal tariff. So I think everybody is just spending ahead of expectation of higher tariff, which means higher prices for things that they need to buy. Okay, so retail sales has actually picked up from negative 0.3 to positive 1.7. So there's a big jump. Again, this is again a big number compared to the market expectation of 0.3% growth. So 1.7 is definitely very robust. In fact, it has been the most robust since June of last year. So again, like I said, this is perhaps a sign that consumers around the world has been spending ahead of the expectation of imposition of tariff. So they were afraid that there will be a tick for tack retaliation, and that will mean higher consumer prices going forward. Here we have Germany PMI, and Friday has been very, very busy. We can see the PMI been released, there was a marginal improvement in Germany manufacturing index for the month of February. Previously in January was 45, which is still in contraction zone. Yes, improved to 46.1, which is better than the expectation of 45.5. So this is showing that the decline in manufacturing has actually slowed down. In fact, over the last 6 months, we have seen a marked improvement in manufacturing in Germany. Okay, we will have to continue to watch this number, but the only time it will be celebrated is when it actually crossed above 50, which is the borderline case between contraction and expansion. So 46.1 is a good number. When you look back at these numbers, it is the highest we have seen since the beginning of 2024. Okay, so again, we want to see whether this trend is durable, whether it can extend further in the months ahead. Okay, but it's definitely a good sign. Now, Eurozone manufacturing is also mimicking what we are seeing in Germany as far as the manufacturing concern, which is the black color bar here is 47.3, and this is matching what we saw in last May. Okay, so again, this is a good sign, meaning to say that in the whole of Eurozone, manufacturing seems to have caught a wind, but it is after all in contraction zone. Like I said, it must stay above 50, currently at 47.3, has is still a long way to go. But as far as the services is concerned, services took a hit. The number came out for January was 51.3. Market expected an improvement on that number to 51.5. It came in a lot worse at 50.7. So while manufacturing has picked up, the services sector has seen a setback. So more or less, these two numbers cancel each other out. Okay, while the world celebrates the return of manufacturing, but services is also something that we need to see elevated. Currently, it is still above 50, but it is only marginally above 50, so it's not strong enough. However, if the manufacturing PMI in the Eurozone can pick up above 50, that will be a different story. But for now, it is still in contraction zone. Worst case, we have both the services and the manufacturing sector still in contraction zone. Okay, we have to continue to watch this. Now, the other one, of course, will be major, will be the services PMI in the UK. Market expected 50.8, which is a touch lower than the number for January at 50.9. It came in at 51.1. So UK depends on services. So that means that there has been no worse off. In fact, yes, improved a little bit. But we can see compare overall to the performance in the services sector for the whole of 2024, 51.1 is a good number, but it is nowhere near 55. Okay, so we can see over the last 4 months, the services sector seems to be suggesting it is struggling. Okay, and if this is the case, that would be bad for the UK. Now, then we come to the US itself. We can see that the PMI numbers was a little bit mixed, okay, but the services sector has taken a major hit. Manufacturing has seems to be improved. 51.6 is a touch better than 51.5, which is your expectation, which is again better than the January number of 51.2. But what caused the market to turn southwards this past week has been the services PMI in the States. From 52.9, market was expecting 53. It came in below 50. Now remember, anything below 50 is contraction zone. Now the US also depends a lot on the services sector to keep the economy going. Now that the S&P Global Services PMI has dipped below 50, that will be a concern. Now, we will have to wait for the other set of number, which is the ISM Services PMI. If that also confirms that services sector has gone into contraction zone, that will be something we need to be concerned with, because that will actually mean lower stock market prices, because services sectors is a big chunk of the US economy. Okay, so we will have to keep this number in check, because this is a very drastic drop from 50, almost 53. Now we are at the lowest we have seen since 2024. Not a good sign. Now again, I have mentioned that today there is an election ongoing in Germany, which is still ongoing, and the result will most likely, or rather the exit poll will started to publish results maybe as early as 1 a.m. Singapore time. So we have to watch. Now the leading candidate is a guy called Merz. He's from the CDU, which is the right-wing party. If they manage to win the election, they will have to work with another party unless they get outright majority, which has not been the case in most recent election in Germany. There have to be some kind of horse trading among the parties itself. However, if the ultra right wing, a party called the AFD actually wins the election, and even if they don't win, if they are going to be leading a coalition government forward, that will be materially very different. Okay, because the AFD is an ultra right wing. They are anti-immigrants. They are anti-climate change. They are anti-war, and they want to rebuild the pipeline back to Russia. Okay, so basically they want to have a better relationship with Russia. So if that is the party that comes out ahead, okay, then the dynamics will change dramatically, not only for Germany, it will change the dynamics for the whole of the EU and NATO. So going forward, tomorrow's result will be very, very interesting to watch. I think the currency market will react first in Asia time zone. So tomorrow, if you see a big move in the euro dollar, you can definitely attribute it to the result of this election, which we should know the result in about 5 to 6 hours time. Okay. Now, I want to also announce that I will be doing my first on-location seminar in Kuala Lumpur next month between the 9th and the 10th. The 9th is a Sunday, okay, and it will be in the afternoon from 2:30 to 6 p.m. Okay, the weekly market rep will continue right after that. And Monday, if you're going to be interested to stay with me for live trading, you are more than welcome to join us again on the following day in the evening at 7:30 to 9:30 p.m. The location right now is most likely going to be Dorset Hatamas in Kuala Lumpur. Okay, so there will be a promotion. I will leave this promotion to the broker who is going to be sponsoring this event. So the location will be at Dorset Hatamas. Hopefully we can get at least 20 people to show up, because if you do, then it will be a more lively kind of discussion. If not, it will be very intimate. So if you are interested, later on I should be able to put the link forward for you to register for the event. Okay, I forgot to put the link here, but later on I'll try to remember to put the link up. Okay, all right, just to let you know that there will be a seminar on the 9th of next month, 9th and the 10th. Okay, so yeah, I'll be more than happy to share with you my thought on the impact of Trump's policy and the geopolitics that's unfolding in around the world, not only in Europe but also in the Middle East, and what impact Trump's various policy, whether it is tariff, whether it is deportation, whether it is any of the other pet policy that he has announced during the campaign. So all this is going to be very, very interesting, because coming to March, remember throughout my my webinars on Sunday, I've always mentioned March to be a crucial period. I think the period between March and April is going to see a major, major move in equity markets, and also in crypto, and also in currency. In fact, a lot of major assets is going to flip positions going into either the end or the beginning, at the end of Q1 or the beginning of Q2. So this seminar is going to be my take on what I think may happen as we move towards the end of Q1. Okay, time has really fly, because right now we are only one more week towards the end of February of this year. So times really fly. So I want to keep you guys posted as to what I'm thinking may be happening this crucial year. Now, going forward in the coming week itself, we have retail sales for New Zealand on Monday, expected to be a good number. And then followed by Wednesday, we have the consumer price index for Australia. Expectation is for no change at 2.5% for the month-over-month number. And then on Thursday, we have the GDP Q4. This will be the second estimates, expected to be 2.3%. And then Friday will be very busy. Friday, we're going to have CPI numbers for Japan. No estimates here. Germany will have their retail sales, also no expectation. And then in the evening, we will have CPI and harmonized index of consumer prices for Germany. Here we expect to see an improvement not improvement, a deterioration, because previously it was actually negative for the month-over-month number. Now we're expecting a 0.4%, which is quite a bit of a jump. Okay. Now we'll also be expecting GDP numbers for Canada. No expectation here for Q4. Then followed by the all-important PCE number, which is the personal consumption expenditure, and we are looking at perhaps a mixed number. Month over month, we do expect a run up in prices from 0.2 to 0.3, whereas the year-over-year number, which is the more important number, we're expecting to see a dip from 2.8% to 2.6. Then over the weekend in China, we will be anticipating the release of their PMI numbers. Okay, we can see that PMI numbers should actually pick back up to the borderline case of 50 for manufacturing, and for non-manufacturing, which is the services, to stay marginally above the number that we saw in January, which is 50.3 compared to 50.2. So there you have it. This is the entire week. I think the market will get very interesting on Friday, because in Friday you can see there's a bunch of odd numbers coming up, which will move the market, especially the PCE numbers in the States. So going forward, I'll be sharing with you my views of the markets itself. As usual, we will start off with the Dow Jones. Dow Jones actually saw a massive drop. This is the daily time frame. You can see daily time frame, we saw a massive pullback on Friday, and that was the result of what? Do you know what's the result? Why we see that? Because we have a terrible services PMI numbers being released on Friday, which caused the market to sell off. Okay, so again, this sell-off is actually quite severe if you look at it from the daily time frame. So does it mean that we're going to see that three wave that I've been mentioning for quite some time? Now, if this is going to be what I think is going to happen, this low here at 41,733 will be challenged one more time. Remember, this is the low that we saw in January, in mid-January itself. So at the rate this is moving, it does look like a pattern of an A, B, C move challenging this low here. Maybe what is going to happen next. Okay, so going forward, near term is definitely going to be a little bit bearish. Okay, but that does not mean the entire trend has flipped. Okay, in fact, I have reason to believe that after this correction is over, depending on whether it is a simple ABC or a more complex pattern that will unfold following this, the market is still lower to buy, because at the end of the day, money has nowhere to go except to move into risky assets. Okay, so this is my personal view. I think that after this drop, there could be a buying opportunity that may present itself. Okay, now in the other index itself is the same thing. Let's take a look at the S&P 500. So this is the daily time frame. You can see that the sell-off here has been even more dramatic. See, of course, here we do not see a five-wave move. This could be the first part of a move. Okay, and if you want to go down to the lower time frame, perhaps you can see something a little bit more interesting. For example, we take a look at the 4 hours time frame. You can see this is only beginning. Whereas the Dow Jones has already finished its first leg, has rebounded to almost challenge the all-time high. But this past week, you can see the price sell-off. So we could be seeing the unfolding of a second leg of an ABC downward move in the Dow Jones. But in the S&P 500, we don't see that. This could be part of the first leg. So what may happen next, if this leg here does not accelerate too much into lower, then maybe perhaps there's a possibility of a bounce. But this bounce is definitely what you call that, a bounce as a corrective move towards this pullback from 6,147.2. Okay, so this move should ideally result in a near-term bounce, followed by another move lower below Friday's low at 6,007.9. Okay, so that will be the ideal time. So again, we do not know whether this low that we saw on Friday is the ultimate low for this first leg. If it does, depending on how it unfolds, but I think somewhere between 5,009 to 5,960 could be somewhere here in the middle, where we hopefully will be able to see a temporary bottom. But by and large, I think we have turned negative for the US equity markets, because the services PMI is definitely not a welcome news, because like I say, between manufacturing and services, the US economy is leaning more towards being a service-oriented economy, and the PMI numbers for the S&P global number has has been a disaster. Okay, so if we get another set of PMI numbers, which is the ISM services PMI numbers, which also match what we are seeing in the S&P global set of PMI numbers for services, then we get a confirmation that we need, and that will mean that the Fed is probably going to shift its focus from fighting inflation to trying to save the economy, meaning to say there will be the possibility of rate cut if the services sector is proven to be soft. Okay, so again, we will have to watch the numbers. I think the Fed is not going to react almost immediately. I think they will wait for a couple of months before they react. So at the earliest, it also ties in with my expectation that somewhere towards the end of Q1 and the beginning of Q2, we may see some kind of material move that may result in the market stabilizing and then perhaps resuming its bullish uprun. Okay, for now, you can see near term is bearish. Okay, even for the S&P 500. Next, I want to show you the Nasdaq. Now, the Nasdaq has been the one that's leading the market lower this round. Okay, here in the daily time frame, I want to show you the daily time frame. Again, this is very similar to what we are seeing in the S&P 500. The market have a marginal high at 22,236.3 just this past week. Okay, on Tuesday, the market registered a marginal high, but this has been undone by Friday sell-off. Okay, so in the lower time frame, if you look at the 4 hours, you will notice that this move here is very much similar to what we are seeing in the S&P 500. This move here is only the first leg. So ideally, we want to see in a perfect world, we would like to see at least a shallow bounce, ideally unfolding in a three-way pattern. So there is possibly a market doing 50% recovery to somewhere around 21,800 or 900 levels. And then if the market shows signs of reversing, okay, then that could be the second leg of this move. Temporary for now, I think there is a possibility of market going to as low as 21,200, at least for now. Okay. However, again, having said that, okay, this market is a lot more bullish than the S&P 500 because in the 4 hours time frame, it is still favoring the upside, whereas the 4 hours time frame in the S&P 500 has already turned negative. Okay, so again, we get a bit of a mix among the major equity index on Wall Street, but look out for further weakness, at least over the medium term. Okay, so we will have to watch as the market unfolds this coming week. We take a look across the pond, a look at the UK, for example. We want to see UK is also wobbling. This is the daily time frame for the FTSE 100. It's beginning to come off, but here we do have a bit of a very small three wave. Okay, so we have not seen a major reaction in the European stock market just yet. Maybe they'll play catch up when the market opens tomorrow afternoon, especially if the result of the Germany election is showing that the ultra right party, the AfD, actually wins the majority of the votes. Okay, so I'm thinking more negative near term because I think Germany election is going to be a watershed event. We will look back in history and point to what's February 23rd as the turning point in the politics in Western Europe. Okay, so this will have major implication for the European equity markets. I'm right now seeing signs of bearishness appearing, or at least the possibility of a reversal. Okay, so let's take a look at the 4 hours. 4 hours, the three wave that I mentioned earlier on can be seen clearly in the 4 hours here. You can see there's a three wave move here. Okay, so if we do get a bounce, we probably will see a more complex corrective pullback. I think the stage is set right now for lower prices in equity markets in Europe. And this is only UK. Let's take a look at DAX, which is the German index. I do expect a bit of a move in the DAX itself. Now, of course, going into the election week, we can see that there are people taking profit, but not before it create a new high at 22,937.5. Okay, we can see that on Tuesday there was a new high traded. Okay, and this is followed by an outside bar. On the same day, it created what we call a all-time high. So this is what we call an inversion. Market create new high, close lower than the past two bars before. In fact, it closes below the past three session, okay, and it ended on a weak note on a weekly basis. So this is definitely not a welcome news, and it could be a sign of weakness going forward. We do not see a classical reversal in a weekly time frame, you see, but this is nonetheless a reflection of the weakness going into the week itself, okay, the closing for the week. So the market closed about 50% of the previous bar here. So this could be interesting, okay. This could be a sign of weakness going forward, at least in the near term. Then we take a look at the Euro stocks, which I have been telling you that I do believe something may actually be telling us that the market may actually be topping up. Here we have again following DAX. This is the daily time frame. On Tuesday we have a new high, but we do not have the bearishness that we saw on DAX. DAX actually created a new high and closed that day lower than the previous four session. So that is a very bearish setup. However, the bearish setup came the day after. Okay, you can see this bar here actually on Wednesday was actually quite bad. Okay, and this is followed by a week closing for the week itself. So all said and done, I think there will be a temporary high being in place for European equity markets. So I'm going to watch the European markets when London opens tomorrow afternoon. Look for sign if I can actually take up some short position, because I think I may be a bit too late already, because I think when the result is announced later on in about 5 hours time, the market is going to get lower when the market opens in London tomorrow or in Europe tomorrow. So there we have it for equity markets in Europe itself. Now let's take a look at Nikkei. Now Nikkei is definitely benefiting from what we call the better Q4 GDP, okay, which is 0.7%, which is very, very good. However, having said that, we can see Friday, despite the great GDP number, the market for the first time actually closed below this support line here. It has been respecting this line for quite some time, and Friday was the first time it actually closed below this line. So again, this could be suggesting that with good news, the market cannot go up, and in fact, yes, actually climbed below a significant technical point here. So it suggests that maybe we'll be looking for further losses towards the 37,500 to as low as 37,300, at least immediately. These two line here, these two confluence of line here between 37,300 to 37,500 could be where the market will be heading next. Okay, so near term, it is also likely to be bearish, technically speaking, despite the very robust GDP number for Q4. Okay, we have seen a three-wave move, and this three-wave should actually extend lower. Okay, so here we have weakness on Wall Street. We have weakness, most likely weakness in the European equity markets, and followed by the weakness in the Japanese equity markets. The only exception in Asia seems to be the Hang Seng Index. Now, ever since DeepSeek was the rage and was in the news, the Hong Kong tech stocks has been benefiting quite a fair bit. And the near terms, you can see this is the near term result. This is the 1 hour time frame. The Hang Seng has been rallying since. You can see this is very, very strong. Okay, 1 hour time frame. So this suggests that I think Hong Kong market may have caught some wind. Okay, so on Friday itself, we can see we have seen the prices at the highest for quite some time. This is daily time frame, and if you compare this, this is as good as what we can see all the way back here. What this is, possibly all the way back here. Let me see what it is. This is all the way back in 2022. Okay, so we are at a 3 years high, which is quite remarkable. Okay, ever since DeepSeek was in the news, the equity markets in both the mainland China as well as in Hong Kong, especially the tech index of the Hang Seng, has been very robust. In fact, this will be considered to be very, very strong rally. Okay, so this is the only equity market that's going against the grain. Okay, it suggests it may it may react negatively to further losses on Wall Street, but again, the trend here is quite robust. Okay, generally, I think there will be because everybody is waiting for the Chinese government to roll out a stimulus package, which they have been not announcing just yet. Okay, maybe there will be something to further take the equity markets higher as far as the rate chips are concerned. Okay, so this is the only bright spot in the equity markets. Hong Kong market and Chinese market seems to be the flavor of the month. Now, going forward, we'll be looking at the currencies. Here, we will be looking at the euro dollar. Now, euro dollar has been struggling. We can see that this is the euro dollar chart. Okay, it has gone up. Then on Friday, it came back down again. And I'm still basically long, okay? But it's getting closer and closer to my price. I hope there will be one surge towards the 105.60 levels so I can disengage from this. So we will have to see whether that will be the case. But for the time being, that seems to be suggesting that we are seeing a bit of a rebound. Now, whether this rebound is over, we do not know. It does not look to be over just yet. It needs to go above 105.33, at least at a bare minimum. Okay, so I'm putting a profit taking just above this at 105.60 to see if I can reach that number. Okay, so by and large, this is a down market. The market is severely in a bearish mood. Okay, for the major currencies. That means to say the dollar is in a major uptrend. Yeah, the dollar has been taking a bit of a hit of late, okay, but that may change soon, okay. But with the numbers that came out on Friday for the services PMI, suggesting that the economy is going to be in trouble, and that brings up the possibility of the Federal Reserve interest rate cut. So at least based on this news, there will be expectation that the dollar should be weaker for a while. Okay, and if that is the case, then it will continue to benefit the major currencies at the expense of the dollar. So this is the outlook for dollar. Let me show you the sterling. On the daily time frame, you can see that sterling has been a lot more robust. The market actually managed to go into a marginal high, okay, at 126.79, okay, before it closes a little bit weak at 126.31. Okay, so by and large, this is seen to be a three-wave, but my concern here is that three-wave is unfolding as a three-wave corrective pattern, and it has hit my target at 126.80. The high traded on Friday was 126.79, close enough. So if this is the end of this move, then what will happen next will be lower prices. So we have to look at the technical reaction to this move on Friday. If we see further losses in the sterling, okay, in the next few days, then obviously there's a good chance that this rebound from 121, okay, is over. It has unfolded in a very neat, classical, almost textbook-like three-wave rally. Okay, and if this is the case, it's time to see lower prices next. All right, we want to talk about the Japanese yen. Here we have Japanese yen continue to strengthen against the dollar. Okay, so here we are beginning to see a pattern here. Dollar near term is still weak. Of course, the dollar yen rates is of course we have to consider what the Bank of Japan is going to do going forward. The market expectation is that the Bank of Japan is going to hike interest rates to as high as 1%. So if that being the case, there will be more room for the yen to strengthen relative towards the US dollars. So here we have a three-wave pullback followed by another possible three set. It could end up as double three, means two sets of three wave, okay, to pullback. So this is suggesting a near term we could possibly see further strength in the yen at the expense of the dollar, meaning to say dollar yen may actually trade lower. But what I would like to see is for a brief rebound, ideally in the three-wave pattern, followed by another drop below 148.93. Okay, so this is the low on Friday, and the most recent low here is 148.65. So I think they are close enough. It may offer near-term double bottom support, but I think it may actually eventually be taken out in the next wave of pullback. So this is my dollar yen expectation. Let's take a look at Canadian dollars, which has been very volatile of late. This is the Canadian dollars. Okay, dollar versus the Canadian dollar is also pointing lower. Now we have a massive sell-off about 3 weeks ago. Okay, from the high of 147.89. Okay, and this has basically damaged the chart, because what happens over here is that we have a high traded. Sorry, this high is actually marginally high. This high is 148, 149, 35. Okay, yes. So here we have a high here that suggests that we may be seeing higher prices going forward, but it closes as a reversal pattern. This day when the market traded to a new high at just under 140, developed into a very bearish development. Subsequent days, we can see market has been trading lower, although the momentum has weakened somewhat. Okay, but I think the momentum will be favoring near-term losses going forward, suggesting that we may see further losses in the dollar rate. So for those who are holding on to dollar pair, it would appear that the dollar will experience near-term weakness going forward. All right, any other currency that you want to watch? If not, I'll move on to commodities. Like I said, if you have any question, put them into the chat box so I can address them. Here we have the gold market. Now, gold market actually have a new high this past week. Now, this is the new high for gold. This is the spot gold, $2,954.90 per ounce. Of course, this is the spot gold prices, and we are still continuing to see the opening of the spread between the London spot gold prices and the COMEX gold futures prices. And this past week, we're getting news that Elon Musk may be auditing Fort Knox, which is where most of the gold are being kept. Okay, if the result of Musk audit on the gold holding is not what the market expect, then we can expect an upheaval in the prices of gold. Okay, so if all the golds are accounted for, all well and good. Okay, but if the number of golds that is currently in Fort Knox is nowhere near the 5,000 ton, then that will be a big problem. Okay, so again, there's a possibility we may see a near-term top for gold, but again, I'm keeping my fingers crossed because the overall trend in gold is very, very strong. So do not try to short this gold market. In fact, if we do get a pullback, see this pullback as another opportunity, perhaps the last opportunity to buy before the market go up. Okay, so there's a possibility we may see an extended rally in gold prices. Of course, gold right now, there's a lot of things that's moving in the gold market. A lot of people are saying that gold prices in London are lower because there's a lot of people wanting to withdraw, and there is a shortage in gold. People are basically doing that arbitrage, selling gold in COMEX and demanding delivery. And they're basically trying to play the difference between the London spot gold prices and the COMEX prices in New York. Okay, so this is an arbitrage opportunity, and if that's the case, it's going to further inflame the current panic within the gold market. So again, we have to watch this, but do not try to sell this market, because even though there's a possibility of a pullback, do not be tempted to sell. In fact, I want to only look at long position. Okay, so at this current price, near $3,000 per ounce is definitely not a good price, but I'm not sure whether we're going to get anything better. Okay, but if we do get a chance to buy at lower prices, we should. Okay, especially below $2,500 per ounce. That will be great price. Okay, so this is gold market. Let's take a look at the silver market. Now, silver is reacting slowly. In fact, silver prices has not really been improving a lot. Okay, and this is the weekly time frame. Prices has hit some kind of pocket at $33.34. That was last week high. This week we have a marginal high, lower high, which is at $33.20. So we are beginning to see some resistance in the silver market. So if you are bearish on the prospect of a near-term pullback, if you have to sell, maybe you can look at silver, but do not sell gold prices. But I don't think it's going to be worth it, because the overall trend is so strong that if there's going to be a pullback, I am more happy to be looking for levels to buy. And if we do get a pullback below $30 per ounce, I think that will be great. Okay, for time being, we do not know that will be the case, but if it does happen, then I am going to be a buyer. Oil prices continue to drop, which is quite disappointing, because you can see this is the hourly time frame. You can see the sell-off actually accelerated. I've actually gingerly gone back to buy on Friday. And the market went up for a while before it come back down. So I'm still holding on to this position because the low has not been taken out just yet. Technically, it is definitely not a good sign, but that said and done, the overall pattern suggests that right now we are in the VDR area. This is the weekly time frame, and anything inside this blue box is considered to be a good price to be buying. Okay, but I'm not going to sit here and wait for the price to go below $57.23. If the market do take out a marginal low, I will exit first. I will lose some money, but I will reposition it again on the buy side. Definitely, I'm going to be buying because in the higher time frame, the oil market is a bull market. There's no reason I should be selling at current price. In fact, I should be buying, not selling at all. Okay, so overall, I'm still bullish on the price of crude oil, although we have a bit of a very severe weakness going into Friday's closing. Now, this week we have two events in the crypto world that move markets. The first news that came in was on Thursday, whereby Coinbase, or rather the SEC case lawsuit against Coinbase has been withdrawn. So this is, if you remember over the last 4 years, the previous chair of the SEC was a guy called Gary Gensler, and he is very much anti-crypto. And he has actually sued a few crypto firms, including Binance. In fact, the CEO of Binance, a guy called CZ, was not only fined heavily, he was actually locked up for a couple of months. And it looks like the same fate will befall Coinbase, which is the listed company exchange, listed in New York Stock Exchange, Coinbase. And since Trump came into power, the former chair of the SEC has resigned because they have different views of the markets, and now a new guy will be taking over the SEC. Okay, some guy by the name of Jack something. Okay, Jack Smith or something. Okay, he is definitely crypto friendly. And one of the first few things the market expect is that for most of the existing lawsuit against various cryptocurrencies will be withdrawn. And that has been the case on Thursday when this news hit the market. The overall crypto market actually rallied very strongly. Okay. So this is the hourly time frame. You can see the market actually went up quite strong, right? In fact, so strong that it was above $99,467 at one stage. After the news was announced that Coinbase lawsuit has been withdrawn, the market actually rallied from a low of 93,000. So there was a big move of almost $6,000 in this move itself. Okay, but that was undone on Friday by another news, which was unfortunate. Now, there's another exchange that was based out in Dubai, a company called Bybit. Their accounts was hacked, and as much as 1.4 to 1.5 billion dollars in token was stolen. Okay, so that news hit the market when Bitcoin was doing very well above 99,000. When this news hit the wire, everybody sell off. Okay, so they already identified the hackers. They are based out in North Korea, called the Lazarus Group. Okay, but whether they can get the money back is another story. Okay, so right now Bybit is still processing withdrawal. Okay, although they are trying to raise money to actually stem the cash flow. Okay, so what we are seeing here is that market continue to weaken. As we are speaking right now, Bitcoin is now back to 95,700. Okay, I've also gone long on Bitcoin just before this move went up. Okay, now it looks like it is below my entry price. So everything happens. It's just a little bit too fast for me. Okay, for now, this move here was very strong, followed by an unexpected turn of event that saw prices actually move very aggressively downwards. So now we have a bit of bounce on Saturday. Now currently the price is again losing ground. Last we checked, it's at 95,700. So the same can be seen across the board, even in Ethereum. In Ethereum, we can see there was a price spike. Okay, did not do as well as Bitcoin, because it failed to take out the previous high at $2,948. The highest it went up was $2,843.70 and then this happened. But the rebound was sharp. Now, this rebound relative to what the Bitcoin rebound is definitely a lot more robust. And the pullback here is definitely lesser than what we just saw on the 1 hour time frame for Bitcoin. So right now, it does seem that Ethereum was the major coin that was hacked. Most of the token that was stolen was actually Ethereum. So Ethereum did not experience a near death. In fact, it has rebounded back quite remarkably. Okay, suggests maybe the worst may be over for these highs at Bybit. Okay, so again, we are to watch on Monday. But what we are seeing on Bitcoin right now, it seems that there is a very little confidence that this is over. But from the appearance and the price structure in Ethereum, it does suggest that the rebound is rather sharp. Okay, and the pullback over the last few hours has not been as severe as what we saw in Bitcoin. The other one that you also want to watch will be Solana. Now, Solana has been the blockchain that a lot of meme coin has been based upon. Okay. Now, if you remember, 1 month ago, before Trump's inauguration, we saw the launch of Trump coin. Trump coin did very, very well, and that Trump coin was based on the Solana blockchain. Okay, so we see the prices has gone up, but right now it seems that Solana is suffering from the crash in the Libra coin, which is another coin that was launched in Argentina. Okay, so maybe the President Malay saw the success of the Trump coin, decided to promote a new coin called the Libra coin, and that crashed very badly. And lawsuits are flying right now, and as a result, Solana prices has not been able to rally. Okay, but it did not fall as sharp as the other coin as a result of the hack at Bybit. Okay, not directly anyway. Okay, so there's a possibility based on this pattern itself, because the pullback has not been as sharp, there's a possibility that it may come back again to the upside. Okay. Now, the other coin that I've always been very interested in, this coin called the Ripple coin. I am still looking for opportunity in this coin here. Okay. Overall, the Ripple coin has a lot of reason why I'm very positive. You can see that the market has been doing a triangle move. It broke out the triangle. Now, this is the entire distance. It exceeded that target by a little bit to a high of $2.83, and price pulls back on a close to close basis. It has come back to retest the most this resistance support here. Okay, so if you look at a close to close basis, let's turn it to a black color. So if you look at the close on close basis, the market broke out, come back and bounce. So I think there is reason to believe that there is technical support around this line here. Okay, so going forward, prices are a bit weak right now, but if continue to drift lower, it is highly unlikely we'll be able to buy below $2 again. But if the opportunity arise at $2.40, that will be as good as it comes. Okay, because the price come back and test this line, that will be about $2.44, 45, 46 cents. Okay, if that's the case, then I think maybe there's a buy kick, a proposition to buy. Okay, because we do not see a drastic move here, because this is part of a breakout, and if this line can actually hold, it could act as a kind of some kind of near-term support. Okay, guys, this is all I have for you, and let me see if I can find you the link to the workshop itself. Let me get this. Just give me a moment. I will put this onto the chat box. Presentation slide. Can you see my insertion here? This is the link. Can you see it? I just put it under the chat box. So follow this registration link if you are very interested to attend this workshop, which is going to be held in Kuala Lumpur. And this will be the first presentation for this year. And because we are at the pivotal period in time, which I think come March or April, we want to be ready for the next move, which I think will be big. Okay, if you have no more questions, then I will end my session here and I will see you guys next Sunday. For those who wants the link, reach out to me and I will send you the link directly. Okay, you can find me on Facebook as well. I think on Facebook, okay, or you can find me on LinkedIn. All right, guys, thank you very much for your time and I shall see you next Sunday. Bye bye.